Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us discuss today house property. Concept video already I have uploaded. If you not watched that video, watch that video because conceptually you should be clear. And problems also I have solved. Now we have started solving the PYQs, that is previous year question papers. 2025 Jan Feb question number 9 section C we are solving. Mr. Praveen is the owner of 3 houses. The particulars are as follows. Particulars: Brahma Nilaya, Vishnu Nilaya, Shiva Nilaya. Fair rent per annum, municipal value per annum, standard rent per annum, let out per annum, unrealized rent, repairs, interest on loan for construction, municipal tax, purpose of use. This is very important. Based on this only you are calculating. The first house is let out for residential purpose. Second house is self-occupied. Third house is let out for the residential purpose. So here you are calculating for the first house and the third house. Okay. Second house is self-occupied property, so you are not going to calculate. What is the first house? Brahma Nilaya, Vishnu Nilaya, Shiva Nilaya. First you need to take municipal value. This is most easiest chapter in income tax. Never skip this one, and it is important. Only the format, if you remember easily, you can score out in income tax. Income tax, I am telling you, it is a life subject. It will be useful for your entire life. So municipal value. What is the municipal value? Municipal value is 1,50,000. This we are not going to consider. 1,70,000. Self-occupied property. 1,50,000, 1,70,000. With this, we are comparing the fair rent. Fair rent. Fair rent is 1,20,000, 2,50,000. Now, by comparing these two, whichever is higher, we are going to consider. This will be called as notional rent. Which is higher? 1,50,000. And which is higher here? 2,50,000. Now, with this you are comparing the standard rent. Standard rent. Standard rent is, it is 1,45,000, 1,55,000. 1,45,000, 1,55,000. Now, whichever is lower, this will be called as the expected rent. 1,50,000, 1,45,000. Which is the lower? 1,45,000. And here 1,55,000. Now, with this, whichever is lower, that is expected rent, you are comparing the annual rent. This will be your actual rent. Annual rent or actual rent. It is given let out per annum. How much it is? 1,80,000, 2,64,000. And here you can see there is unrealized rent. So that unrealized rent should be minused from the actual rent. Okay. For Brahma Nilaya, nothing it is there. So 1,80,000. 1,80,000. For Shiva Nilaya, it is 10,000. So what is your actual rent? Actual rent is 2,64,000. From this minus 10,000. How much it will come? 2,64,000 minus 10,000. 2,54,000. 2,54,000. This will be called your gross annual value. Whichever is higher you are going to take. 1,80,000, 2,54,000. From this, if any vacancy period is there, that you should minus. But here there is no information related to the vacant. So you are taking from gross annual value, you are minusing the municipal tax. Municipal tax. Municipal tax is how much? 10% on the municipal value. 10%. On 1,50,000, 10% is 15,000. On 1,70,000, 10% is 17,000. 1,70,000 into 10% is 17,000 municipal tax minus 1,80,000 minus 15,000 is 1,65,000. Then 2,54,000 minus 17,000 is 2,37,000. Okay, this will be called as your net annual value. Okay, now you need to take the deductions. Deductions under section 24. Deduction under section 24. Under first one, standard deduction. Standard deduction, that is 30% of net annual value. On net annual value, you need to take 30%. 1,65,000 into 30% is 49,500. 2,37,000 into 30% is 71,100. Then you need to check any interest is there. Interest on loan for construction it is there. So that you are going to take. Interest on loan. It is 50,000 and 75,000. Here nil. Now what is your income from house property? Income from house property is 1,65,000 minus 49,500 minus 50,000. It is 65,500 minus 75,000. Then 2,37,000 minus 71,100. 1,65,900. We have calculated income from house property. Now total income from house property 65,500 minus 75,000 plus 1,65,900 minus 75,000 plus 65,500. 1,56,400 is the total income from house property. Right? Understood? Municipal value, fair rental value, whichever is higher, this will be called as notional rent. With this you are comparing standard rent. Then you are taking whichever is less. It is called as expected rent. with the expected rent, you are comparing the actual rent or annual rent. If any unrealized rent is that should be deducted, then you need to show it. Then you are taking whichever is higher, it will be called as gross annual value. From that, any vacancy period is there, that you need to minus. There is no vacancy period in this question. Municipal tax is given, paid by owner only, you need to take it, not by tenant. That should be minused, and it is calculated on the municipal value. Then you will get net annual value. Then deduction under section 24. The first deduction is standard deduction, 30% of NAV. On NAV you are going to calculate interest on loan. Sometimes interest on marriage and all they will give, you should not take it. Interest on repair, that also you are going to take. Only other than construction related, if anything is given, you are not taking. Only related to construction you are going to consider interest on loan. Then income from house property you will get, because there is no income, only interest you are paying. It is a loss, that should be minus. Then you will get the total income from house property. I hope all you have understood. Thank you for watching. Have a great day.